Alrighty guys, welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about the top 3 stocks that I am buying this week. Now, I hope you guys enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe to the channel. If you have any questions, let me know down in the comments. And if you guys want to get more information about investing, swing trading in the stock market, I do have a course and a chat room for less than a cup of coffee. So make sure you guys go ahead and check that out. I'll put that down in the description. So now let's jump into it. Roll that intro. I hope you guys enjoy it. Let's go. Come on. Alrighty guys, so starting off with stock number 1. Stock number 1 is FUTU, ticker symbol FUTU. Now, for those of you that don't know what this company is, this is a wealth management company, and this is the company behind the broker Moomoo that I am actually using. On top of that, the company brings in a ton of money, and if we go ahead and look at their last earnings report, they beat expectations, bringing in about $1.6 billion. And the beauty of that is on their previous earnings, the company still beat expectation on the revenue and brought in about $1.6 billion, beating expectations of about $84 million. On top of that, the company has seen a lot of sell-off from all the way from here at highs at about $147 all the way to about $45. So it sold off roughly about $100 worth, which is quite a lot. On top of that, if we go ahead and draw out basic support, basic resistance, it does have some very, very strong, support rate here at about $28. And it does have some resistance up here near and around this $50 mark. Me personally, I just think that this represents such a good opportunity to buy a stable company that is increasing revenue, increasing cash flow, and on top of that, instead of the stock going up because of that, we've seen a lot of sell-off from this just because of the general market selling off and the volatility of a lot of these wealth management companies and pretty much brokers lately, where these companies that are still doing very, very well on revenue, they're just selling off. And so I definitely think looking back, in the next couple of years, we're going to be wishing we would have bought this stock here at about $45 a share. On top of that, guys, a good strategy would be to dollar cost average, develop that good average price for those shares. I just think right now is such a good opportunity. It sold off, that was, the highs here at $180. So it sold off $140 worth, which is crazy. So right now represents a good opportunity. Pick up a couple of shares at a more affordable price and kind of hold it, right? This is one that is going to be a little more risky, a little bit of a higher risk, higher reward play, but overall still a very, very stable company that you don't have to worry about. Now, stock number 2 is ticker symbol OKTA. Now, this is a cloud computing company. So over the past couple of years, we've seen just so much growth in general from cloud computing, where this stock has pretty much gone from $55 all the way up to $294, establishing very, very hard resistance, and it established some support here at about $209. We got a lot of buying pressure near and around there. But lately, we've seen just general sell-off from this stock from $207 all the way down to $91 a share. On top of that, it did establish some decent support right here at about $77. And the beauty of this company is actually doing very, very well, increasing revenues, increasing cash flow. But the issue with it is the company's not profitable. And I definitely think that is a huge thing for a lot of people. A lot of people like to invest in companies that are profitable. But personally, anytime you invest in a company that's not, it's going to be a little bit of a higher risk, higher reward play. On top of that, the company beat expectations on their last earnings report. And you'll notice what happened is the stock went from 85 all the way up to $111. And then we just got a lot of sell-off back down to $79, $80. And then it slowly started working its way up, and we've just gotten general sell-off. So personally, right now, underneath this $90 mark represents a very, very affordable time to buy, given that the price to earnings is relatively affordable at about a 25. This right here is a good stock. You don't have to worry about it, and we've seen a ton of growth. On top of that, do you think we're getting more reliable on cloud computing or less reliable? Personally, each and every day we're getting more and more reliable on technology, and I don't see it going anywhere anytime soon. Now, the last and final stock here is Lululemon, ticker symbol LULU. LULU here, Lululemon Athletics. Now the beauty of Lululemon is it does have, one of the issues, it does have a little bit of higher price to earnings, but it does have consecutive income and sales growth, which is awesome. You want a company that is killing it on their revenues, killing it on all their income. It does have very strong support here at about $281, and it also has some resistance up here near and around this 345 mark. So definitely for me, this is a good opportunity. I definitely think in the next couple of weeks, we'll see this dip below that $300 mark, and that's where I'm slowly going to start buying in on my shares. Looking at their last earnings, beating expectations, bringing in $1.6 billion on that last one, bringing in, $2.1 billion on this one here, company bringing in $1.5. Very, very consistent income. Yes, it is a little more volatile, but if you use the volatility to your advantage, buying in on support, dollar cost averaging, there's a great way to make some money off this, and I'm definitely keeping an eye on it this upcoming week here. But these are the top 3 stocks for this week, guys. I hope you guys enjoyed it. If you did, hit that like button, subscribe. If you have any questions, let me know down in the comments, and we will see you guys later. Remember to stay happy, stay positive, and stay safe. Take care.